It now gives me great and distinct pleasure to invite Dr. William Warren Smith, the President of the Caribbean Development Bank, to address you.
Chairman of the Board of Governors of the Caribbean Development Bank and Prime Minister of St. Lucia, Honorable Dr. Kenny D. Anthony, Governor General of St. Lucia, Her Excellency Dame Perlette Louise, Prime Minister of Grenada, Right Honorable Dr. Keith Mitchell, Dr. the Honorable Ralph Gonzalez, I don't see the Prime Minister here. Premier of Montserrat, Honorable Reuben Meade, Chief Minister of Anguilla, Hubert Hughes, Honorable Hubert Hughes, Cabinet Ministers of the Government of St. Lucia, distinguished governors of the Caribbean Development Bank, members of the Board of Directors of the CDB, members of the Diplomatic Corps, distinguished observers and guests, management and staff of the CDB, members of the media, ladies and gentlemen. Mr. Chairman, thank you so much for inviting us once again to the Helen of the West. Like the legendary Helen of Troy, the magnificent beauty of this island helps us to understand why the British and the French fought so hard to retain ownership of this amazing piece of paradise. History tells us, sir, that those two great colonial powers fought for more than 100 years for control of St. Lucia. Those of us in the CDB family and in the region as a whole will be forever grateful for that outstanding son of St. Lucia and one of your two Nobel laureates, Sir Arthur Lewis. As you know, Chairman, this distinguished scholar played a pivotal role in establishing our bank and served as our first president. Coming here for an annual meeting is always an opportunity to reflect on the great contribution to the field of economics and of his service to our region. In Sir Arthur's theory of growth, which he penned in 1955, he reminded us, and I quote, "The advantage of economic growth is not that wealth increases happiness, but it increases the range of human choice. The case for economic growth is that it gives man greater control over his environment and thereby increases his freedom." Human beings and their happiness were always the primary focus of this outstanding economist. At the CDB, we continue to be inspired by Sir Arthur's emphasis on people-centered development. Chairman, Sir Arthur would no doubt be very concerned about the major challenges that Caribbean countries face today. In a typical borrowing member country of the CDB, economic growth is less than 3% per annum. Losses due to natural hazards have increased from 0.9% of GDP per annum in the 1980s and 90s to 1.3% of GDP today. More than 21% of our population lives below the poverty line. The overall fiscal deficit of almost 4% is unsustainable, and the public debt at 80% of GDP is a serious drag on economic growth. And Chairman, citizen security is under increasing threat, with the homicide rate in many countries far exceeding the average rate of 18 for 100,000 citizens for Latin America and the Caribbean region as a whole. In spite of the economic and social progress that we have made, ladies and gentlemen, this is clearly not the region that Sir Arthur envisaged. Chairman, if we are to create a future based on economic stability and prosperity for our people, if the range of human choices available is to be expanded, if Sir Arthur's vision of our people taking control of their environment is to become a reality, and if our people are to increase their freedom, then our most urgent task is to formulate a strategy for redressing the major difficulties that confront our borrowing member countries. I propose this morning to focus my attention on some of the imperatives for securing the future of our Caribbean. But Chairman, before I do so, I must digress whilst I review some key aspects of the CDB's operations in 2012. Last year was a very challenging one for most of our borrowing member countries. It was no less so for your regional institution. Even as our lending activity slowed, we made considerable progress in strengthening the bank so that we can remain a relevant and reliable partner for all of our shareholders. Let me share some of our achievements with you this morning. We're making good progress in completing the reform of our risk management framework. I would like to, at this juncture, acknowledge the generosity of the Government of Canada, which, with great dispatch, underwrote some of the substantial costs of the early work in this area. We have also managed to change the method of assessing our own creditworthiness to align it more closely with that of the rating agencies. This is a critical part of the risk management refinement. We are in the process of strengthening our internal audit function, and we managed to correct the asset liability position by extending the maturity structure of our debt during the course of last year. We've rectified the breach of our preferred creditor status, and we successfully completed the negotiations for SDF 8, concluding with a program level of $348 million. We recognize with gratitude the solidarity which all contributors demonstrated by replenishing this vital facility in such difficult economic circumstances. We want to take this opportunity to thank you all. Chairman, we have recruited a gender equality advisor and can now accelerate the implementation of a gender equality policy and operational strategy. And very importantly, sir, we have practically completed the recruitment of several members of our new senior management team. Today, Chairman, I am confident that emerging from the challenges of 2012 is a CDB that is stronger, a CDB that is more focused, and an institution that is better equipped to support its BMCs in these challenging times. But what of the region which we are mandated to serve? Are our countries positioning themselves to emerge stronger from the current economic crisis? it can be argued that some VMCs misdiagnosed the severity and the duration of the international recession, and consequently moved perhaps too slowly to begin their fiscal and structural adjustment. What is much more important, however, is the recognition that a number of these countries have begun to adopt appropriate reforms to reverse macroeconomic imbalances and to improve international competitiveness. Even as we applaud and recognize the political courage demonstrated by some of our regional governments to fix that which is within their control, we should not lose sight, Chairman, of the important lessons for a successful adjustment. Let me enumerate a few of these measures, a few of these lessons. There will be little sympathy or support from the development community for countries which stubbornly defy the inescapable logic of balancing our fiscal accounts. Secondly, a sustainable fiscal adjustment in our democratic political culture must consider the interests of the main social classes. If an enduring agreement is to be reached, burden sharing and buy-in from a broad cross-section of our people are non-negotiables. The third point is that doing nothing is not an option once the level of sovereign indebtedness has become unsustainable. These, Chairman, are three important requirements for successful adjustment. In our context, however, there are a few more which we ignore at our peril. The first is that debt restructuring, if necessary, should be tailored to the specific realities of the country. One size does not fit all. Secondly, as much as possible, a restructuring should also meet the sufficiency test, since frequent restructuring damages a country's credibility and its reputation in the financial markets. However, a restructuring which creates a crisis in another economic area, such as the financial sector, does not represent a solution. The third point is that unless accompanied by economic growth, fiscal and debt adjustment are simply examples of kicking the can down the road. Economic growth is the only guarantor of fiscal sustainability and a distributable surplus. And finally, Chairman, a growth strategy in the context of our Caribbean reality will be found wanting if it does not address resilience in all its manifestations. I believe that I preach to the converted here this morning when I reiterate that a comprehensive strategy for building Caribbean resilience ought to cover at least two key areas: adaptation to climate impacts and the creation of a more competitive economy. Chairman, as I have contemplated the path of our borrowing members out of the most deep-seated social and economic crisis since political independence, I am convinced that a safe and successful negotiation of this process will require a broad-based compact of cooperation between Caribbean countries on the one hand and the wider international community on the other. We cannot do it alone. I am further convinced that if this compact of cooperation is to be ultimately beneficial to our borrowing members, both parties will need to understand and appreciate the other's constraints and be prepared to address the issues which could hinder real progress. What are some of the things, Chairman, which Caribbean countries need to do to make a compact of cooperation yield the desired results. Our borrowing members should accord the highest priority to transparency in governance. We owe it to our people to ensure that goods and services procured with public funds follow a process which conforms to international best practice. But ladies and gentlemen, our procurement systems should also inspire confidence in the international community that they are indeed able to get value for money. In addition, our leaders will be required to demonstrate in a timely fashion a penchant for taking tough decisions that promote sustainable fiscal outcomes and international competitiveness. At the same time, they must vigorously engage the international community in providing financing for mitigants to the consequential social and financial sectoral fallout which is associated with the adoption of stringent fiscal measures. With regard to this last point, we should never forget the lessons of adjustment programs of the 1970s and the 1980s. Some of these were so fixated on solving the fiscal problem that they laid waste critical social sectors like education and health with devastating long-term consequences. These lessons need to inform our current approach. What could be the contribution of the international community to a compact of cooperation with the Caribbean? Stringent fiscal adjustment programs, Chairman, such as those required to stabilize several Caribbean countries, are likely to have a discernible impact on the most vulnerable segments of our societies. For any adjustment to be sustainable and for social stability to be maintained, adequate social safety nets, appropriately targeted, need to be in place. These can be financed with donor funds during the adjustment period and progressively assumed by the recipient country as greater fiscal space is created. There is broad acceptance in the BMCs, and I dare say in the donor community, that fiscal and debt adjustment are not sustainable without robust economic growth. What is now well understood, however, is that the Caribbean is the most vulnerable region in the world to natural hazards. There is also consensus that these natural hazards have been increasing in intensity and adversely impacting the region's economic growth. An IMF report earlier this year concluded that over the last 60 years, Caribbean countries have suffered from 187 natural disasters, most of them hurricanes, and that these countries have a 10 to 24% probability of being hit each year. That is the nature of the vulnerability. That report further estimates the annual economic cost of damage from natural hazards at 1% of GDP, representing a considerable drag on economic growth and a central factor in debt accumulation. In the face of these daunting statistics, the IMF has suggested that small island developing states in the Caribbean should be seen as frontline states for climate change funding. Chairman, we in the Caribbean Development Bank want to take this opportunity to fully endorse that position. We are persuaded that growth prospects for our most vulnerable countries will be enhanced if resources for climate resilience can be front-loaded as part of a more comprehensive adjustment package. In particular, climate adaptation interventions should be fast-tracked and targeted at the most vulnerable economic sectors. I speak here mainly of tourism and agriculture. Chairman, we know from bitter experience that even a carefully crafted fiscal adjustment program can be quickly derailed by a major climate event. Buying adequate insurance cover offers an efficient way of transferring some of these risks. The Caribbean Catastrophe Risk Insurance Facility, or CRIF, is a good example of donor collaboration. It is also an excellent vehicle for risk transfer. The problem, Chairman, is that a borrowing member country going through acute fiscal adjustment is unlikely to be purchasing adequate insurance cover. To illustrate this point, the CRIF estimates that based on current levels of coverage purchased by Antigua and Barbuda, by Jamaica, and also by St. Kitts and Nevis, the CRIF payouts for Hurricanes Georges and Gilbert would have been a mere 1 to 2% of total national losses. The prevailing view in sections of the donor community is that countries in fiscal and debt distress should front-load their reforms. In my view, Chairman, this notion should be broadened to include the front-loading of climate resilience support. The CRIF is ideally placed to provide two practical forms of such support to Caribbean countries, which are pursuing broad-based reforms. Firstly, for the duration of the period of fiscal adjustment, say 4 years, donor assistance could be provided to these countries to increase the level of their catastrophic insurance cover to a more acceptable level. Secondly, the CRIF has been placing before donors a proposal for a new injection of funds to enhance the affordability of its new flood insurance product, which would open up yet another window for transferring some of the risk associated with flooding, which is now an almost annual event in our Caribbean. Chairman, the strongly held and frequently articulated view that middle-income countries do not qualify for debt relief needs to be revisited. I go further, Chairman, and assert that the concept of debt relief for middle-income Caribbean countries is one whose time has surely come. The exclusion of highly indebted Caribbean small island developing states from donor-assisted debt relief because of their middle-income status has raised serious questions of equity and fairness in international affairs. Authorities in the European Union have come to accept that their own members cannot grow out of their problems when faced with debt-to-GDP ratios and average effective interest rates that, incidentally, are substantially lower than those faced by most heavily indebted Caribbean countries. What does this imply for the conduct of relations between states? What are the lessons to be learned? This tells me, Chairman, that if a segment of the international community deems its interests to be under threat from the collapse of a strategic partner, they will find creative solutions. The recent European experience teaches us that these solutions can include debt relief in one form or another. Could it be that middle-income Caribbean small island developing states are not favored for debt relief because they are not considered of sufficient strategic importance? As in Europe and elsewhere in the world, why can't donors and beneficiaries agree on performance criteria which would render debt relief a legitimate component of a comprehensive economic recovery package? The region and the donor community at large should do the cost-benefit analysis. Whose interest is served when we stubbornly eschew debt relief even though credible research suggests that sovereign indebtedness beyond a particular threshold is unsustainable. Disorderly adjustments are in nobody's interest. There are enough examples of failed states in our world, Chairman, which, regardless of size, represent a destabilizing threat to immediate neighbors and even to countries much further afield. The implications are simply too dire for us to continue to ignore. Mr. Chairman, let us briefly recap some of the main points which I have sought to make up to this point. First, our BMCs need to address their fiscal and debt issues, but a narrow adjustment program will be unsustainable. Secondly, an optimal adjustment strategy cannot ignore the principal casualties of fiscal tightening. It ought to include mechanisms to cushion the impact on the most vulnerable and provide practical pathways to their economic and social empowerment. Thirdly, the ultimate route out of the fiscal and debt trap is robust economic growth. This will require appropriate domestic policy reforms, underpinned by front-loaded climate and economic resiliency measures. And finally, debt relief for highly indebted middle-income Caribbean countries is a matter which is now impatient of debate. Its legitimacy should be the outcome of broad-based discussions between donors on the one hand and BMCs on the other, and could be executed through the multilateral institutions such as CDB. Mr. Chairman, a few months ago, I had the privilege of attending a meeting of our development partners in Washington. We met to discuss solutions to the difficulties facing our Caribbean region. As I listened to my colleagues, I began to detect a sense of frustration, a sense of fatigue at the region's slow pace of reform. Today, ladies and gentlemen, I stand before you and declare my absolute confidence that our Caribbean, like the South America of my youth, whose prospects looked so dim, whose problems seemed so intractable, like our South American neighbors, we too will rise to realize our true potential. My call, Chairman, is for a strategic compact between the Caribbean, our neighbors in the North and South America, and with friendly countries in other parts of the world. This call is based on my confidence that our region is poised to build on our already considerable achievements in tourism, culture, financial services, to mention a few. The great trading nations of the world now acknowledge our strategic positioning as a major crossroads for international trade. We can expect the transformation of our region's economic fortunes to begin to demonstrate itself in the medium term as the possibilities open up with the widening of the Panama Canal. This is only one manifestation, however, Chairman, of the myriad opportunities that will emerge as we begin to exploit the vast natural resources of our Caribbean Sea, a zone of activity now being referred to as our new frontier, the so-called blue economy. We call, therefore, Chairman, not for a compact based on mendicancy, but rather a compact built on vision and mutual benefit. Mr. Chairman, our challenge in the Caribbean today is a difficult row to hoe. We need to have the assurance that with hard work and with the support of friends, our region will prevail. I frequently find my courage and my will to persevere in the immortal injunction of the great Martin Luther King, who urged us to focus not on the isness of now, but on the oughtness of tomorrow. The challenges we face today, Chairman, should represent for us mere stepping stones to a new and more wholesome tomorrow for all of our people. I thank you very much.